All right, guys, we are here today, man. Honestly, the market is being crazy. I took a look at it yesterday on Sunday. Man, honestly, the market. I took a look at it on Sunday, and it was not looking good. Honestly, the Nasdaq is really testing these 7th-month lows here. If we take a look at the NQ, like we're really right here. Here is the 7-month low on the Nasdaq. Here, let's just take a look at this real quick. Hold on, I'll draw a picture of it. Let me know if you can see it. You should be good to go and see everything here, but let me make sure. But yeah, here is that 7-month low. Here's an hourly chart. That is the 7-month low on the NQ, and we are testing that right now. And so the big question that is going to be on everybody's mind is the correction continuing? Is the market going to crash? We're getting close. We're getting close. And just to put this into perspective, I can put a yearly chart up. You can see the last time we were anywhere close to these levels, prior to the last, prior to March, is what I'll say. Prior to March, the last time we were anywhere close to these levels was September. So that's 7 months ago. It's not looking good, guys. It's not looking good. What do you guys think is going to happen here? Where's my coffee? There it is. We're going to get a poll going live. Does the correction continue downward today, breaking 7-month lows? Yes or no? Vote on the poll. Let me know how you feel. The big question is, does the market crash too? I mean, okay, so the Nasdaq is already broken down. You know, this is just to put this in perspective, I'll draw a picture of it here. This is a 15% drop on the Nasdaq right here. This is a 15% drop. Or no, I'm sorry. That is not a 15% drop. That is like not a 15% drop. This is a 15% drop in the Nasdaq. And so the big risk here is that this is essentially what's happened over the last few weeks in terms of everything. So we basically had this massive 15% correction on the NQ. Really, like, when did the rebound start? The rebounding started on the 14th or 15th, so a couple weeks ago. About 2 weeks ago, the rebounded starts. For the last 2 weeks, we've been bouncing back in markets. And then starting Wednesday of last week, which is really, we had GDP data, we had PCE inflation data, we had economic reports happen last week. Starting at those economic reports, we started to correct again. You know, so like last week we had durable good orders, jobless claims, GDP, home sales, PCE, inflation data. But not just that, like we had bad consumer sentiment, Michigan consumer sentiment data. We had tariff news. And then remember, the day after tomorrow is the tariff day. Tomorrow is the first. The day after tomorrow is the second, which is tariff day. But again, since really Tuesday or Wednesday last week, the market has been red. Retesting the lows. So a lot of people are going to consider this correction continuing. A lot of people are going to say, yep, the correction is continuing today. And honestly, I can't really disagree with that. It honestly looks like the correction is continuing today. We've pushed back down. Now we're back down, testing those lows. So it's definitely not good. Do you think it'll turn into a green day? I mean, it could. You know, I tend to think the closer we get to these lows, the more likely it's going to be that we break underneath. And if we look at the actual low here, it's 19,139. And so if we look at the actual low on the Nasdaq here, it's 19,139. This is the actual low. 19,139. This is the low right here. It happened like on the 15th or 16th. I think we bounced today. If everyone thinks we're going down and it's too obvious, that might be true. Yeah, and really, I've kind of held up buying. I'm definitely not buying right now. I haven't been buying up anything. You guys know this. I've been pretty quiet. I was worried about a bear trap anyway, and I said this a couple times on a bunch of different places, but like, or I was worried about a bull trap anyway. I thought the bounce back was suspicious. So we'll see what happens. But yeah, it's an interesting week. This is honestly one of the busiest weeks in terms of economic reports and catalysts that we've seen in a long time, right? This week is packed full of stuff. Like, let's talk about it for a second. So this week, guys, we have Chicago excuse me. Today we have Chicago PMI. Not the biggest release, but we'll cover it. It's manufacturing data. It's relevant right now. So we're going to cover manufacturing data today. Tomorrow's really when most of the economic reports, the catalysts start. Tomorrow, we got the JOLTS job opening report and ISM manufacturing PMI data, construction spending, and more tomorrow, right? Not only that, but Wednesday is tariff day. It's April 2nd. It's the day the tariffs start. It's the, liberation day is what the president calls it. I call it doomsday. I don't know what we're going to get, but I've been nervous leading into it. And we honestly, we have dropped leading into it. And that's what I thought would happen. That's why I've been calling it doomsday, is because I think leading into that report, people are going to freak out. And not only do we have that, but tomorrow we've got non-farm employment data. So we got prelim non-farm payroll data. Wednesday we have prelim NFP data. We also have Tesla delivery numbers. And one of the reasons the market has been correcting is Tesla. Tesla is all the way down to 250s. It's dropped 50% relative to where its highs were. And it's definitely a stock that's freaking the market out. Tesla's been dropping. It's down 50%. It's part of the reason the market's corrected. It's a tech stock. Market's going down. It's a Mag 7. And yeah, that all happens Wednesday. So again, Wednesday, tariff day, ADP non-farm employment, and Tesla delivery numbers. So all of that stuff mixed together is going to be chaotic, to be honest. Thursday, we got jobless claims, ISM services data. And then Friday, and we also have trade deficit data on Thursday. And then Friday, we have non-farm employment, non-farm payrolls. We have unemployment report, non-farm payrolls, and Jerome Powell speaking on Friday. So just a lot of stuff, a lot of stuff, man. And we'll see what happens. We'll see. Busy week, that's for sure. Yeah, I see that. So he sold it to his own AI company, XAI. So yeah, Elon Musk sold X to XAI, basically to himself. Yeah, fire sale maybe, man. I don't know. We'll see. Ignore me like I'm not here. Bro, I'm talking to everybody, dude. Like, it's not like I've been responding to anybody, really. Like, I've just been talking since I started the stream up, bro. You'll be all right. Do we bounce back, though? I'm looking at a poll. We got over 100 votes already in a couple minutes. 79% say yes. 78% say yes. 22% say no. 21%, 22% say no. Yeah, I mean, we talked about the inverted yield curve a bunch of different times. Honestly, I haven't been buying up anything, and I sold most of my positions pre-December. And remember, the logic I told you guys is that I thought we would correct, and we did, and now we're correcting. It's not really a shock. It's not like, I think when the Nasdaq is up 105%, a correction is probably due, and this is what we're seeing right now, especially leading into tariff day. And again, we'll see what happens, but I'm not going to short. I'm just going to choose not to long. I don't need to top pick the market. I really don't. Definitely top 3. But what a day, man. And then today, honestly, the crash is starting. If we continue down, man, we'll see. Bro, Bill Simon, the founder of Simple Simon Tires, was hit by a vehicle and killed. That's sad, man. What a way to go, too, if you're a tire guy. Tires took him out. Rest in peace, man. That's sad. Yeah, I mean, I think we're close enough to lows that the closer we get, the more like a magnet it is. So, like, I think as we get closer to these lows, again, 19,139, it's kind of like a magnet. And, like, as we test these, I think we're probably going to continue down. But who knows, man? Again, you never freaking know what's going to happen. We'll see if the market continues to break down here. Are we going up or down? Put up or down in chat right now. If you think we're going up from here, put up. If you think we're going down from here, put down. Up or down. Let me know how you feel. Down, 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 up, up. No idea. Down. I respect the honesty, Avalon. Down, 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 down. We did a poll already, bro. We've done a poll. The poll is live already, dude. The poll says, do we continue down today, breaking 7-month lows? It's literally what I'm asking people, sir. So, yeah. Whew. We got a beautiful short up here. Let me put this up on screen. Look at this. We've already taken a lot of it off. We're up about $300 on the day. I think I got to add to this, right? Like, I think we got to just risk it. 15 contracts. There we go. There we go. I'm just going to cut it here. Lock it in. You'll love to see it, dude. Look at that trade today. A little bit early. I thought we were going to break down, honestly. I think we're too close to these lows not to, but who freaking knows, man. But yeah, on this account now, we are up 520 on the day. Unemployment is biggest this week? No, I think payrolls are big. I think April 2nd is big. Payrolls are big. April 2nd is big. I think, all right, so look, guys, hey, we're at lows. We're at lows here, chat. We are at lows, effectively at the low of the last 7 months right now. Effectively at the low of the last 7 months. So we're going to go ahead and short the challenge account here because I think the edge is just really high right now, really high. And we'll add to it as a bounce happens if we can. And we've got a $600 cushion, so we can try to get our last little funded account in here. All right, so we're gonna add. Don't copy me, not an investment professional. I'm not liable if you lose money. I have no freaking idea what I'm talking about. Might be wildly wrong about anything and everything I say. Do not copy me, not an investment professional. All right, there we go. There we go. There we go. Oh man, I shorted way too much here. Hold on. We only need about $500 to get funded here, about 500 bucks. And it's early enough to where we could try it. And we'll try to hold the rest break even and retest it. But again, we only need about 500 bucks. There we go. There we go. I don't know if I like it now. We took half of it off. And we'll add back if we need to. Man, look at this move, dude. So we just cracked lows, I'm pretty sure, of the last couple months. I'm just hoping we don't crack it and then like rebound big here. I want to see a continuation drop. We're up about 700 on the day right now, about 7. It's taking too long to rebound. We'll cut a little bit of it. We'll figure out what we want to do on the rest. So I don't think this. I think we're gonna keep dropping, but I don't know, man. You never really know. All right, there's 30. There we go. All right, we got 15 now. I think we got a short, right? I don't think there's any argument for going long right now, but who knows? Don't copy me. Not an investment professional. There we go. All right, we just took a chunk of that off, locked it in. We really don't need much. There we go. I'm going to add to this too, a little bit more. There we go. There we go. I just took a chunk of that off too. Just took a little bit more off. We have 8 contracts now. I want to give it time. But, man, the market's testing these lows of the last 8 months here. So I think, obviously, the direction is short. But, it's an easy time to get funded. Because I think it's just really predictable. Not an investment professional. Don't copy me. Break. Let's get weak here. All right, I'm gonna cut this and just wait. So honestly, we are still up about $700 on the day. Very quickly, up about $700. There's the retracement that I wanted. I want to catch the momentum breakdown, but I think we might have like a small bounce first. So we'll give it a second, see if we can short into a bigger bounce here. And if we start to get weak, we'll just short quickly down because this is the low of the last couple months. Yeah, we'll just take 10 here and then maybe add some on a rebound here. Yep. Yep. There we go. Yep. Yep. We're basically there, guys. We're basically there. Yep. 10 contracts left. Yep. Yep. All right, we're just going to go ahead and cut it here, and we did it. So that's it. So yeah, shorting this low of the day weakness, very predictable red action, very predictable. And yeah, I'll take it, guys. I'll take it. Pretty good. Very predictable, honestly. We just broke lows of the last 7 months. Yeah, just broke lows of the last 7 months. I'll take it. You can kind of see the full list of trades here. Pretty predictable. Bigger wins than losses, just pretty predictable here. So that should get us there, getting funded in that 50K account. Yeah. And again, this goes to show like something that's very transparent in markets, which is that the closer we get to like big, it might be some of the easiest money in all of finance, to be honest. Outside of like long-term value investing, it really might be some of the easiest money in all of finance. What it is the closer we get to huge milestone levels, right? The closer we get to those levels. So as we get closer to this 7-month low level, it becomes much more probable, and I'm just going to say probable because it's never 100%, but it becomes much more probable that we're going to break that low and continue down the closer we get to it. Like if we're in a longer term range away from it, we might not tap it, we might. But if we get within a very small margin away from that level, it is very, very, very likely that we're at least going to test that level, if not really break it down. The bigger the level, the more likely it is that traders are going to get emotional about it and just sell straight into that level. If it's like a short-term level, it might not mean as much. But if it's a big milestone level, like the 7-month low after a big correction, it's pretty likely we're going to break that level or at least test it as we get very close to it. Again, it's not 100%. It's just pretty freaking probable, you know. So I hope all that makes sense. Whew. Yeah, so here's the big rebound back up. Yeah, market surged. See what the market does here. It's right around a pretty big, it's right around that previous high here too. So the Nasdaq is right around that previous low area, like right around it, close enough to it to make it interesting. Yeah, so it's still testing these lows here. The question is, does it continue to break down now? I think it might. Let's see. Let's see if it retests it early this morning for like a big red day breakdown here. We'll see. It's trying. So here it is right here. Starting to bounce back though. We're up a little bit here. We'll see if we continue down. Don't know which way it's going to break. It looks like it's breaking down, which is good. We'll give it a second. It's trying to come back. Yeah, we're kind of in no man's land. We don't know if the market wants to go up, down, or sideways here. It's bouncing back a little bit now, though. So let's see if it continues. Red is today's new color. Oversold. I'm honestly surprised. Yeah, I mean, it's just hard to tell what the market does right here. We've rebounded back up some. We hit lows. Now we're rebounding back up a little bit. I mean, again, as we get closer to these big milestone levels, the likelihood that we're going to break down and test them becomes pretty freaking high. It's never 100%. Like, you could always get squeezes outside of that from so many people going in short at those spots, but it's just pretty predictable. All right, do we rebound from here now, guys? What do you guys think? Do we bounce back? I think it's close, too. Yeah, just get liquidity here. We'll see if we stop at like 165, but at this point in time, we've tapped that low, and now we're rebounding back up. We got all the way down to 19,118s now, so that's a pretty big low. After the second we rebound, that's possible. We'll see. Yeah, so gold. Gold is soaring up here, guys. The market's starting to turn back down here. Wow, look at this weakness. Let's take a look at gold. So here's Nvidia testing the lows. And I think it's pretty freaking close to the lows of the last couple months, too. Yeah, it's nasty drops here, chat. They're rough. I'm buying VIX. Are y'all buying it? The VIX? I mean, it goes the opposite of which way the market goes. Market goes down, VIX goes up. I'm sure the VIX is flying this morning here. Gold is up to 3150s. 3150s. So we'll see what happens. With gold flying up. Looks like market wants to come back. Let's see if it does. Look at that green candle. That's pretty big. Market's definitely indecisive right now. It doesn't know what it wants to do. Let's see what this 150 level does. Looks like very weak. Flushing. And yeah, let's talk about some news here. Again, I'm looking at some of the big news that's coming out today. The big lead up is Tariff Day on April 2nd, which is Wednesday this week. The U.S.'s O'Leary says the expectation is that the president will issue an extension on the TikTok ban. First quarter GDP growth will be just 0.3% as tariffs stoke stagflation concerns, according to a CNBC survey. And honestly, we did a poll last week asking people whether we're still in stagflation environment. Honestly, something that I'm really happy with is that I was able to avoid most of this correction. You know, we've had people that overpredict crashes, corrections super heavily over the last couple months. And again, if anybody watched this stream, you guys know I got pretty flat in December and saved myself from a 15% correction in the market. It might be more than that. We'll see today. We did crack the lows of the last 7 months this morning in pre-market. The lows of the last 7 months. And so it is very possible that we do continue down on this correction. And yeah, we'll see what we get. We'll see what we get. I'm trying to see if this downward pressure continues. We're kind of indecisive right now. We're kind of going sideways over the last 1, 2, 3, 4, 5, 6 minutes. We did make a couple thousand on our combine account this morning, so that's doing good. But I'm waiting to see if the red action continues. That's what I really want to see. Like, does this brutal red action follow through now and continue down? I think a lot of people are waiting for that. And this is probably like, look at how sideways we are. This is like the sideways action we've seen over the last like 45 minutes. We haven't gone anywhere. Traders don't know what to do. They don't know whether to buy it, but we've already rebounded back up after cracking 7-month lows. They don't know whether to sell it because we're already bouncing back. So we're kind of somewhere in the middle. I guess the only question that I think, one of the only questions that I think are really relevant this week are, do you think the market reacts positively or negatively to April 2nd? Good or bad April 2nd reaction? I don't know, man. I think it could go either way, to be honest. I think it's a hard question to ask. We got Chicago PMI at 9:45 today, but that's it. Looks like the market wants to come back, but then it just kind of retraces back down. It's just a varied response, though. The thing about a range like this is that when we finally break out of this range, who knows what the market's going to do, right? Like, look, here's this super sideways range. Thanks for the... feels like a lot of fear right now. Hard to see it going down. Yeah, well, there's definitely a lot of fear, and there should be, right? Like, the market is testing 7-month lows. And so, you know, there's a lot of fear, right? There's absolutely a lot of fear. And understandably so. It's like, I'm definitely not buying right now. Maybe there was arguments to buy over the past few weeks, but I think they were risky, and I'm not really super interested in buying. But the market is very back and forth. 2 weeks of bounces, which came after a 15% correction in markets. So, like, I think it could go either way, to be honest here. coins are down too. Yeah, I see Bitcoin down. Bitcoin's at 82.5 thousand right now. So Bitcoin's down big too. Yeah. And again, I think even when I ask the chat, it's pretty split down the middle. Like nobody freaking knows what's going to happen, whether we're going to go up, down, or sideways. Yeah, Bitcoin, honestly, I to be honest, when I looked at Bitcoin this morning, I expected it to break down a lot more than it did. And so it's holding to a certain extent. And I'm still an optimist with Bitcoin, but yeah, I mean, I don't know, Bo. I think one of the reasons the market's dropping, one of the things we covered on Friday, and honestly, we got a great turnout for it. We had like 3,000 people watching PCE data on Friday at 8:30. That was one of the turning points, in my opinion, right? Like, and what I mean by turning points is that's one of the points in which the market started to freaking turn. Inflation data came out noticeably higher than expected almost everywhere. PCE inflation was higher than expected. We just had a lot worse market reactions to that. We also had Michigan inflation expectations come in hot. Inflation expectations were raised again from the prelim to the finalized numbers. So another inflation increase week to week, month to month, and that definitely freaked people out. So yeah, inflation freaking people out, scaring the market for sure. 1 year inflation expectations went up, 5 year inflation expectations went up on Friday. And so that's kind of what we're getting is like fear from higher inflation. And again, a lot of people are going to be, if you heard me over the last 3 weeks or so, a lot of people right now are going to be screaming stagflation, which is a period of markets in which we've had to make a lot of hawkish action, a lot of restrictive action. When inflation's a problem, the Fed gets restrictive. And what I mean by that is they raise interest rates, trying to push the economy down to make prices go down, right? It's called a restrictive or a hawkish Fed, whatever you want to call it. One of the states of markets that follow this is called stagflation. It generally precedes a recession. And what that means is that we've raised rates aggressively to a point where we're weakening the economy, but we still see high inflation, right? So it's a period of markets in which we have high inflation as well as a weak economy. And that's kind of what we're seeing. We're seeing high inflation data. I don't know how weak the economy is. I don't know if it's like crazy weak or anything like that, but GDP is going to be almost negative, if not negative in this current quarter, according to a lot of analysts, as well as some people I think read this morning it was going to come in at 0.3%. So that's pretty close to negative. That's definitely a weaker economy than we've seen, mixed with, periods of inflation data rising, like PCE was higher, CPI I think was a little bit higher, maybe not, I'll have to go back and check. But the Fed looks at PCE, and we got that this past Friday, and it was slightly higher than expected, and the market went down on this report. So I think a lot of the market's response is from tariffs and everything like that, but yeah, we'll see. Who knows, man? Who knows how the market's going to respond? Stagflation is people without work go up, taxes up, food up. Yeah, well, stagflation is an economic state where we have high inflation and weak economy. It generally follows like a restrictive Fed is what it does. Like that's a stagflation environment. It precedes a recession. Like that's generally what it is. But, you can call it a lot of stuff. Like a lot of people are like, we've seen high inflation over the past 5-10 months. Growing inflation with stagnant economic growth. Let's see if we continue to drop here in the Nasdaq. So I have been shorting most of this here. If you look at my trades, so we are shorting most of this. We'll go ahead and get out the rest here. Cut it. We'll probably switch to our actual funded account now. I think I'm basically there. I saw a post on Facebook that said the economy is strong and we're not in a recession. Yeah, I mean, they're going to say that. Yeah, I mean, look. Here, hold on, Pawn. I'll send you a message. Yeah. Do you think the SPY hit 530s? Let me look at it. We're at 550s. Yeah, no. I mean, what I told Pawn just now was that Katie was them, you know. But again, it's just better to not respond. They just like, you know, it's all good. It doesn't matter. Recession started in 2021. Yeah, I mean, we had some weak economic data. It depends on what you call a recession. By the technical definition, a lot of people are going to say we hit that in 2021. You know. SPY will likely hit 350. Dude, we got 720 people here before 8 a.m. Hey, thanks so much, guys. We appreciate the love for sure. Yeah, so winter earnings season starting again. I think that's another element of everything going on that might influence things. Like if I look at, usually earnings season is sprouted by JP Morgan. Like bank earnings usually precede like Tesla, Apple. They start April 11th. So in the next 2 weeks, we got earnings season starting again, which is pretty big, you know. It's a pretty big event in markets. I think with the context of everything going on right now with corrections, pullbacks, dips, fear, earnings season might catapult us to good or bad areas in finance. So I think y'all just want to be careful over the next couple weeks for sure. Will go down when the market opens what? Yeah, I mean, I don't know. I think we got to look at a lot of different stuff. The SPY, somebody said SPY 530s. Or no, wait. The SPY will likely hit 350. Nah, bro. The SPY's not hitting 350s, dude. Like, actual 350s, bro, on the SPY, that will be one of the largest bear market corrections we've seen in like 100 years. Dropping from 613 down to 350 is a 43% drop. I don't know if we're gonna drop that much. That's a big drop. It just feels good to know that we kind of got to the hater a little bit. Like, that feels good, you know? I don't know. I think people giving them shifty guidance are absolutely selling people on future EPS. Could be enough this time, maybe. Yeah, Tesla. I don't know, man. I still see a lot of Teslas in my area. Maybe it's just my area, but I see a lot of people driving a Tesla still. Again, the real problem is that, like, Elon Musk supported the political side that's not super supportive of EVs, right? And then the other side that does buy EVs are certainly kind of like retaliating now. And so I think that's a bad landscape for Tesla, a bad environment for them, you know. But it's certainly interesting to see what's going to happen. Love Tesla. Yeah, look at the market retest up here. Again, I got to pull up like Nvidia here too. I think another big level that you want to pay attention to today in markets, guys, is Nvidia here. So like, look, here's Nvidia. The low of the last, like, let me see when the last time Nvidia was here. It's the low of the last, like, this is the level right here. It's 102s. The low of this candle is at 10. Wait, hold on. Let me zoom in. The low of this candle is at 102s. Basically $102. We're at 105s right now, Nvidia. This is the low for Nvidia of the last, I gotta put like a longer term chart up, a much longer term. That 102 level is the low of the last 7 months for Nvidia, and I think it's an important level that the rest of the markets are following here. So the last time Nvidia was anywhere close to that was in September. And so it's the low of the last 7 months for Nvidia. And again, markets and finance are all about levels, right? So in Nvidia, that level, in my opinion, is 102.15. Exactly. 102.15. Again, not an investment professional. I have no freaking idea what I'm talking about. Might be wildly wrong about anything and everything I say. Don't copy me. Again, I have no freaking idea what I'm talking about. But that's what it is. The low of the last 7 months on Nvidia, 102.15. If we break that level, I think we're going to get a lot of fear. But we're not under it yet, and we still got a little bit of room to rebound and consolidate. I think the opening bell is going to be especially interesting today, just based off of everything going on with markets testing correction lows, 7-month lows. It's a weird market today, guys. Just be careful. I think obviously it's very weighted to the short side. I don't think that's a controversial take, having the market this weighted to the short side, but it's certainly fun to pay attention to, and we'll see what happens. I figured we were going to get a lot more interest today, and we did. We got almost 800 people here at 8 a.m., which is fun. I appreciate you guys joining me. Again, we don't even claim to be experts. I don't even act like a good trader. Everything we put out there is free. I don't sell a course. Everything we do is just to give people free economic reports, free data. We cover all the stuff going on in the market while we're live. And so if you want a place that's going to cover all the breaking news, all the economic reports, do live trading, live day trading, investing, swing trading as well, subscribe. A lot of growth over the last couple months, so we appreciate it, guys. Thanks so much. The issue with the tariffs is the large countries will retaliate, and this will cost the markets. Yeah, for sure. Hey, thank you. Appreciate the love, guys. Yeah, I remember when we were at 350, somebody said the SPY would drop like 70%. And I remember being like, what? Like, we're not dropping that much. All right, so we cracked one of these big lows here. Market's still testing it down here. Still falling. Look at this. All right, so look at this level here. I think 165 is a pretty big level. We just broke underneath 170s in the NQ. Looking red. Yeah, market's still looking very weak, guys. Very weak. Y'all just be careful. All right, look at this red rebound here. Let's see if it follows through. Looks like it. Wow. Let's see if there's any catalysts coming out that influence this. All right, so we had German CPI come out lower than expected, 2.2%. Month over month came in at 0.3% versus 0.4%. I don't know if we got any other big news here though. Leaps on Mag 7 ETF doesn't sound too bad. Yeah, I think a lot of the market thinks we're going to come back up, but we're very rangy. So look at the Nasdaq here. So again, here's the Nasdaq since really like 7:50 market time. Over the last 20 minutes or so, we just haven't really done anything. We've kind of gone up, down, up, down, up, down, up, down. Bigger range. The range is getting a little bit larger, but we're still pretty flat and choppy and neutral. John, can you check back charts back in 2009 this date? Smart film, you gotta give me some more context to it, brother. So you gotta give me a little bit more context to why you want me to check the charts back to that date. Yeah, you gotta kind of tell me why. Time to check the IBM sector. Strategy buys Bitcoin. I'm driving now. Well, yeah, but you got to tell me the context is what I mean. Like, you got to tell me why you want me to look at that level of 2009. I'm not saying you're wrong. Maybe there's something relevant about 2009, but telling me to just look at 2009 for what? What am I looking for? Is what I'm asking. Hey, what's up, Goose? Yeah, don't text and drive, bro. Be safe. Look at that drop. So still choppy, but hopefully we're getting weighted to the downside here. I have a very hard time going long today. A very difficult time going long. I'm not saying there's not a reason to go long, but it's super hard for me to. Is it raining bad in Baton Rouge, man? I don't even know. Y'all be safe, though, if it is. Look at this red showing up. Wow. Nasty breakdown here. Look at this red. So look at this red showing up in the Nasdaq, guys. Oh, you think it's similar to today? Yeah, I could check out 2009. Let me see what happens with this dip, though, here, guys. So, again, the low of the last 7 months is 19,185 on the Nasdaq. So, 19,120, basically, on the NQ. So, we are breaking down a little bit. It's definitely looking weaker now, but it doesn't mean anything yet. We got to just be patient and wait. I started dollar cost averaging into the SPY. Let's see how it looks like in 10 years. In 10 years, you're probably good. Even if we do keep crashing down in 10 years, time heals a lot of wounds in the market in that way. And so in 10 years, you're probably good, brother. You're probably good. But who knows, man? I'm not an investment professional. Don't copy me. I have no freaking idea what I'm talking about. All right, so look here, we're moving down a lot more right now, guys. Wow, look at this. Nasty. All right, so we had a little rebound drop here. Let's see what the market does now. It's kind of indecisive here, though. It's hard to figure out. Invest in gold. Yeah, I mean, I generally like gold. Gold's been on a big upward trend, though, man. It's been breaking all-time highs. That's not really my favorite time to buy it, but it still might work out. Gold is generally a good enough asset to where if you DCA long-term, you're probably going to be okay. Short-term, anything can freaking happen, though, so just be careful. Yeah, and again, this week's a busy week, man. We're doing our best to, like, trade smart and trade safe and not give too much back, but a lot of red. Bitcoin hit 75K this week. Maybe. All right, so let's see if we break down. You need to see my crypto portfolio if you want to see red, bro. Hey, be careful, dude. Be careful. All right, so here we are now. I mean, real estate makes money in a lot of different ways. Like, even if, okay, to be honest, mortgages might get worse, not better, in the upcoming year, right? But real estate's not really a short-term investment. Like, the benefit of real estate is, like, if you buy a $300,000 property, I do this all the time, but pay attention, it makes sense, right? If you buy a $300K property, regardless of what interest rates do short-term, regardless of whether Fed's hawkish, dovish, anything like that, in general, you're most of the time going to make money to appreciation. In general, not always. Sometimes you might lose money or whatever, but in general, you'll usually make money towards through appreciation. Now, hold on. I'm making a really nice trade here. Oof. Here, I'll show you guys it. Hold on. Shorting. And we are, hold on. All right, we're out. Anyways, okay, so say you buy a $300,000 house, right? Say you buy a $300,000 house. In general, you're gonna appreciate what, about 3-5% a year. We'll call it 4. All right, so in 15 years, you buy a rental property. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. Oh, wait, that's 16 years. My bad. Here, look, we'll call it 561. We'll call it in 16 years. We'll do 16 years, sure. That $300,000 property is going to be worth a little bit on, 560, 600, 550s, 520s. It's going to be somewhere in that ballpark, right? Not only is your property going to appreciate over time to keep up with inflation, right? And this is keeping up with inflation, and you need it to appreciate to keep up with inflation. But say for that $300,000 property, there's something called the 1% rule. You want to make about 1% of your house value per month in rental income. Now, it's not always feasible. Let's say you make $2,500 a month. Times 12 months. In a year, you're going to, make about $30,000 in revenue, but you got expenses, you got insurance, you got all kind of stuff. So let's wipe out about 40% of that. And it'll end you with about $18,000 in profit. And so not only are you profiting from appreciation in a rental property, you're also profiting from rental income. And again, this rental income is going to increase over time. Let's give the same, let's say you make $18,000 a year net. And then you're also going to, again, this is going to go up with your rent. This is going to go up as your house appreciates. You're going to be able to ask for more rent. Your rental income is going to go up over time as well. So we can do the same thing. You take 18K and you do 1.04 times 1.04, which is a 4% increase in rental income year to year. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. In 16 years, you're going to make about 35 grand a year from that rental income. And so it hits it from a lot of different ways. And this is all under the perfect scenario. So it's certainly less passive than investing in stocks. It's going to take way more of your time dealing with tenants. What I always recommend is go with a manager that'll do it all for you. Go with a manager that'll do it all for you. Get a property manager that'll do it all for you. People trash stuff. Yeah, but I took away 40% of the income. 40%. Almost half of the income I took away to deal with stuff like that. But it's certainly not passive. I guess is the biggest flaw is that it takes a lot of time and energy. Pay a property manager what they're worth, a good property manager what they're worth, and it'll be easier. Import exports fell by 26 and 20% respectively. Yeah, I'm trying to look. We don't have any 8:30 data today. We don't have anything. Yeah, I mean, you're giving us the highest 40%. I mean, that's only if you're in one of the highest tax brackets, Sandy. So for most people, it's going to be 15 to 20% long-term capital gains for properties that you've owned for over a year are taxed at 0, 15, or 20, depending on your income bracket. So it's not going to be anywhere near 40. Not unless you're buying the property and then flipping it immediately for short-term capital gains. It's just not the same thing. Yeah, corrections, we in general get at least one 10% correction a year. So we'll see if we continue. Are these the best times to buy what, Rationals? I'm not telling you to buy anything. I have no freaking idea. If you're buying real estate, it depends on how you're buying it. It's definitely not the right time to get a mortgage and buy a rental property in that regard. Like, mortgage brokers will tell you to refinance, but like insurance or interest rates are high, house prices are up. Like, it's just not the best time to buy with a mortgage. If you're paying cash and you can kind of throw a bunch of lowball offers trying to get one that desperately needs cash, and you can get a really good discount for your property, that's a different story, you know. Yeah, again, this is a big day, guys, for markets. Yeah, so let's take a look at 2008 if we can. 2009. Yeah, you're talking about right here. Yeah, but again, this doesn't look like today at all, and I'm going to explain why. So this percentage drop that we got in 2009, oh wait, I'm sorry, yeah, so this is the downturn you're talking about. So this is wildly different than anything we're seeing now, right? Just to give you guys the difference, right? So we dropped from 2250 in the NQ, and we dropped all the way down to $1,000, basically $1,000. And so on a percentage basis, we dropped almost 60% back here in 2009 and 2008. This was the mortgage disaster is what this is. This is the 2008 mortgage crisis. Now, you might be talking about this right here. Sorry, and maybe I missed this, and so I might have been wrong here. You might be talking about this right here. Looks like what we saw, which is a dip, a rebound, and then a dump. And that's possible. You know, if that's what you're talking about, that's a different story. And we did drop 60%, so maybe your 350 thesis was correct. I just think it's a different reason, though. Like, okay, 2008, we had mortgage drama going on, delinquencies, and I'm not saying we don't have that now, but it was a different environment. We had big manipulation with, like, MBSs and mortgage securities, and that caused a really crazy drop. We don't have nearly as much manipulation now as we did back then. It's certainly not that easy to get a mortgage right now. It's kind of the opposite. It's difficult to get a mortgage, strict, super high interest rates versus the opposite of that back then. Now the chart and the technicals might look the same, but yeah, I think it's a different thing. This was the 2008 mortgage crisis. Like, The Big Short movie was about all this stuff here. It's a little different than what we're seeing today, I think. But who knows? On a technical perspective, that might be what you're talking about, which is dip, rebound, drop. Another thing you'll notice, though, is that the rebound that we faced here was much less strong. It was much less time extensive. Like, it wasn't as long. And yeah, I don't think it necessarily looks the same, but it might be the same. I don't know. All right, so look at this rebound in markets. So the market's actually pumping up a little bit right now, short term. Back up. Let's see if it holds. Nasdaq's climbing. See if we had any news to justify this. Why is all the stock market down so much? A lot of reasons. Tariffs day after tomorrow. Fear. Inflation expectations rising. Stagflation fears. Inflation popping up a little bit last week in PCE. Lower GDP expected for the current quarter. You know, just a lot of fear. All right, market's popping back up. Look at it. It's at 19, almost 19.2s. Let's see if 19.2 holds right there. We just tapped it. All right, guys. Also, if you haven't already, we are day trading on Top Step's funded account program today. If you want to learn to day trade, do not fund your own account thousands of dollars. This is my first plug all day. We've been streaming for over an hour. Instead, try Top Step. Top Step gives you a 50K demo. It's the best way to learn day trading. And day trading futures, very similar to day trading stocks. No PDT in futures, though. You could day trade the S&P, the Dow, the Nasdaq, the Russell, gold, some currencies. Patterns are incredibly similar, and day trading futures is very similar to day trading stocks. Top Step is the most legit one in the world, regardless of what anybody else says who are, trying to promote others. Top Step, the most legit one in the world. They give you a 50K demo, and if you can make 3K in profit on that 50K demo without losing 2K first, following their rules and conditions, they fund you 50K with a 90% split, and they pay out millions, fund thousands of traders, pay out millions in actual withdrawals. And again, it's very similar to funding your own account. You get 90% split once you're funded. You get to keep your first 10K in profit. So the reward is very similar to funding your own account. If you fail, you lose $50 instead of funding thousands and losing that. Your risk is noticeably less. It teaches you how to trade under pressure. It's just a great way to learn. Most day traders lose. Doesn't matter what course you take, who your mentor is, who you follow. Most day traders are about to lose. It's a lot cheaper to lose here. Learn how to trade, get your reps in, pay your market tuition this way versus depositing thousands trying to look cool in the market. It really is. I'm biased, but genuinely good for traders. Genuinely good for traders. But some would say I'm the top 3 most biased trader of all time ever in the world. Not an investment professional. I'm not liable if you lose money. If you want to check them out, here's the link in chat right now. Understand CFTC 4.41. Hypothetical or simulated performance have limitations, guys. All right. So, again, we've been trading on this today. Yeah, I mean, the tariffs from the president are certainly one of the reasons the market's going down. I would say they're probably the main reason the market's going down. I mean, it's not just that. It's inflation, which you could argue is also from the tariffs. PCE inflation went higher than expected on Friday. Market freaked out, didn't like it. Michigan consumer sentiment inflation expectations went down. Michigan consumer sentiment data was weaker than expected. Inflation expectations increased versus what was expected. So all of that stuff was bad. I mean, I wouldn't say the Q is popping long term. I'm talking about the short term last 5-minute rebound that we're seeing. We're honestly breaking lows this morning. So if I have a direct, I'm certainly not longing anything today, personally. Again, not an investment professional. Don't freaking copy me. I have no idea what I'm talking about. But I'm definitely not longing anything right now. We're way too close to 7-month lows for me to be interested in longing anything. And honestly, maybe some people are going to make money on the long side. It ain't me right now. I'm definitely not doing it. I'm just not going against the trend. I think it's too weak. I think it's too likely that we're going to retest these lows sometime today. And so I'm just not trying to profit from in between there. And I don't think that makes a lot of sense. Yeah, and again, guys, so again, I'm not attacking anybody. I'm not blaming anybody. But the drops that we're seeing are certainly from the tariff news that we've seen over the last month or two. And then this is leading into April 2nd. Again, I'm not blaming anybody. I know people get really emotional about politics. I'm very neutral politically. I don't care about any of that stuff. That's just what it's from. It's from high inflation and tariff fears. That's why the market's coming down. All right, we're heading up. We're at 19.1s, 19.2s. Yeah, it is a short-term thing. But what I'm saying right now is that I'm not buying up markets right now. I'm just not. It just doesn't make any sense to. Honestly, yeah, the market's bouncing back. So here is the low. Again, I'm going to put it out there. Here's the low of the last 7 months. It's right here. That's the low. That's why I'm not going long right now. I don't care how much we bounce back short term. I'm not going to trade against that trend. Yeah, Wednesday is a huge day for markets, guys. Wednesday is an absolutely massive day for markets. Wednesday is tariff. We got a lot of stuff Wednesday. It's tariff day. It's April 2nd. It's the day the tariffs are starting. Not only is it that, though, it's also Tesla delivery numbers, and Tesla is one of the reasons the market's coming down. We got Tesla delivery numbers, quarterly delivery numbers for Tesla. I'm pretty sure they're dropping April 2nd. Let me make sure. I'm trying to make sure they're dropping today. They're not today. All right, so the quarter one delivery consensus is about 377,000 EVs, the worst performance in over 2 years for Tesla. Wall Street's prepping for it too. Another reason the market might be decreasing is that, generally speaking, they're going to drop 2 days after the quarter ends. The quarter ends today. Today's the last day of the quarter. It's March 31st. And so, yeah, they're most likely dropping April 2nd, which is also obviously tariff day. It's also non-farm employment day. And I think we got I think we got jolts tomorrow and more. So, yeah, y'all just be careful. Yeah, a lot going on Wednesday for sure. Honestly, we got Powell on Friday, non-farm payrolls and unemployment on Friday, the JOLTS report on Tuesday, ISM services and manufacturing data this week. We got jobless claims. We got all kind of stuff going on. We got tariff day, Tesla delivery numbers. It's one of those weeks that is just chock full of data. Market's still trying to rip back up here. Let's see if it does. Be greedy when others are fearful. Yeah, I would just be careful today, man. We got a lot of stuff testing lows. Why would you leave a trade opening, Towers? That's not what you do, bro. All right, so market is finally starting to pull back some after this rally here. I see Tesla bouncing up. So Tesla's at 246s. I'm trying to see where the lows of Tesla are. Tesla, the low of the last 6 months is about 210. So we still got some room here, to be honest. Yeah, there's a lot of good quotes right now. Fearful when others are greedy, greedy when others are fearful. There's another one that says the time to buy is when blood is running in the streets. There's another one that says money is not made in trading, money is made in waiting. There's a lot of good market. Give me your favorite stock market / finance quote out there right now. Let me know how you feel. Judgment week. Yeah, I mean, again, this week is one of the busiest economic report weeks all year. Your loss is my gain. Yeah, Mark Douglas, the GOAT. All right, so market's still heading back up. Yeah, I'm looking at other news. We're waiting on stuff, but it's a little slower. All right, so China's top 100 developers sees March sales at minus 11.4% year over year. Yeah, so German CPI did show up a little bit better than expected, but I don't know if it was good enough. I think we did get a bounce back from this. The SOFR rate came in at 4.34%. Stocks take the stairs, elevator down. Yeah. Microsoft's down a lot, honestly, too, man. Microsoft's at last time I looked at it was at 370s, right? Yeah, 373s, man. So Microsoft already cracked that low of the last 7 months here. Here's Microsoft. Microsoft, which is interesting because Microsoft owns a chunk of OpenAI. But Microsoft's down a lot. Yeah, so German CPI showed up at 2.2% year over year, 0.3% versus 0.4% last time. I think the whole market's kind of waiting. And again, we do have economic data coming out. Like, we have economic data this week. We got earnings season. I don't think it's next week, but the week after next is when it starts. A lot of new AI apps. Yeah. I mean, I like Microsoft as a company, personally. Again, not an investment professional. Don't copy me. But Microsoft's a good company. It makes good money, good margins, good growth patterns. What's the EPS, or what's the PE ratio of Microsoft? 26. So not a super high PE versus a lot of other tech stocks. Could be a lot worse. Also, guys, give your boy a follow on x.com. We post a daily, at least one daily news report every weekday morning, breaking down what's going on in stock market and finance. It's completely free, doesn't cost anything. We talk about stock news, tariff news, economic reports for the week, all that good stuff. If you want to check it out, give me a follow there. I appreciate it. It's at Beginner Trades. Great way to help support our free content. I appreciate the love. Thanks so much. Best time for market, go all in on 5. So you're basically saying swing for the fences with small risk, and if you lose, but that's you're basically expecting to 30x your money, messy. You know, I don't know. I don't necessarily think so right now. We don't have any 8:30 reports. We got Chicago PMI, which I don't know how much it's going to influence markets, but we got that today. I'm going to put my account up. We've been trading, but yeah, y'all just be careful today, man. Again, we're really close to lows, really close to lows, so I would just be very careful if we can. Yeah, we're very close to lows. Bitcoin still breaking down a lot. Yeah, Bitcoin's breaking down. Honestly, I'm surprised Bitcoin's not down as much, or down more, because it's still holding some. And honestly, wait, is it rebounding? Yeah, so Bitcoin back up to, what is this, 80? Yeah, Bitcoin's rebounding short term. Look, let's put it up. Here's Bitcoin in the middle chart. It's back up to 80, almost 83K. Do you guys think it's time to buy Bitcoin? I'm not telling you to. Do you guys think, put yes or no? Is it time to buy Bitcoin? Looking at our poll numbers, we got over 1,000 votes. 79% say yes, 21% say no. We'll see, guys. Yes, yes, no, 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 yes, yes, no, yes, yes, no, 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 yes, no, no, yes. Always time. Meta's rebounding too. Honestly, Meta's been one of the more successful stocks in markets. Look at Meta. Meta up to 566. We'll see if that holds too. Yeah, so again, they're thinking first quarter GDP growth will be just 0.3% as tariff stoke stagflation conditions. They think first quarter, again, we got economic weakness and high inflation. Here's another question. Put yes or no. Are we in a stagflation economy? We did a poll last week. Most people think we are, but it wasn't super sided to any side. It was like 60-40. Do you guys think we're in a stagflation environment? Yes or no? Yes, yes, no. If the answer is no, why not? Explain yourself. I'm curious. No, yes, no. Cheeseburger. Yes. What's up, Sam? Wait 4 months for stagflation? Yeah, I mean, honestly, I think one of the most important metrics this year is this GDP report that we get in April. The GDP report, it's going to be the initial estimate, which is the first reading for the current quarter. Now, it's the least accurate one. It's the initial estimate. But a lot of people think the current quarter is negative. If it comes in negative, and then we get high inflation the next day, we got GDP and then PCE data is what follows it the next day in April. I think it's going to be late April. That day is incredibly relevant. Because if we get a negative GDP report, or at least close to negative, and then a high PCE inflation report, all we're going to hear is stagflation. Now, even this last GDP report, it was higher than expected. It was 2.4% GDP. PCE data was higher, though. It was at 2.8% versus 2.7% expected. So we actually did get worse inflation data, but the GDP data came in positive, more positive than expected. So, My answer is no, because Dad works on Wall Street. He said it's going to keep dropping. Regarding stagflation, and again, just to put this into perspective, stagflation is an economic condition in which we have weak economic reports and high inflation data. It can follow like a restrictive Federal Reserve with high interest rates. Yeah, Powell speaks this Friday as well. So not only do we got all that stuff going on, we got Powell speaking on Friday as well. So a lot of stuff, man. Yeah, well, tomorrow's the second quarter, Jonathan. The second quarter is tomorrow. And that's what I'm saying. That's why we get Tesla delivery numbers somewhere around the second. We also get first quarter GDP report next month in April. It's going to be mid-April. I think GDP will be negative and PCE will be up next month. Yeah. I don't know. They're thinking right now, again, the data I have on the screen is first quarter GDP will be just 0.3%. So not quite negative, but close. Yeah, gold, honestly, guys, has been pumping. Look at gold. Is this all-time highs? Oh, man, let me see. Yeah, this is all-time highs for gold. Just broke out. Gold broke all-time highs about 20 minutes ago. That it does. Gold loves a crisis for sure. All right, we got a little consolidation after this latest run here. I'm gonna try to short this, a very small trade, very small. We'll take 2 contracts here. See if we get a flush. There we go. Take half of that flush off. Oof, what a turn. We'll short a little bit more into this, see if we flush down. What a doji type candle here. We got out of half of that. So if we break down now. Little baby trade here. I want to give it a chance, but all right, so we just got out. We made a little bit of money, but very small, so we're slightly green on the day. I probably could have made a little bit more, but I'm just going to be careful. Bitcoin surging up, guys. Bitcoin, look at Bitcoin. Here, I'm going to put just 2 charts up. Oh, I minimized it accidentally. There we go. I'm going to put just 2 charts up. The top chart is going to be Bitcoin. And so we are green on the day from that trade. Slightly green. Not much, though. I think by the end of quarter 2, we'll be rocking and rolling. Maybe. Hey, we'll see. Wait 6 months and then start buying. I don't necessarily disagree with that. I'm not telling anybody to buy anything, but I think we're in a situation in which, like, we could keep correcting, and I think we're really close to 6-7 month lows, and it's very possible we continue down, but nobody knows. But it can get sticky if we start to break these lows again. Like, look, here's the low down here. If we start to crack this low, this 120 level, this 19120 level, especially with some deep momentum, we could break down heavy. And again, this is in the landscape of this current week where we got Tariff Day on April 2nd. We got JOLTS job openings tomorrow. ISM services and manufacturing and PMI this week. We got Tesla delivery numbers April 2nd. We got non-farm employment data on Wednesday, prelim payroll data. We've got jobless claims unemployment Thursday, the actual unemployment rate on Friday, and then non-farm payrolls on Friday as well. Following all of that, we got Jerome Powell speaking on Friday also. So, yeah, it's a week. And again, all that stuff could influence the market, so you just want to be careful. And again, look at Bitcoin rebound. Bitcoin almost green on the day. Yeah, so we almost got Bitcoin green on the day. We'll see if it holds. Oof. But yeah. Is it today at 1 p.m. and 5 p.m. for executive orders? Let me look this up. Is it really? Sheesh. Scary. It's at 1 p.m. today. Let's talk about it. Yeah, so he is scheduled to sign it today, March 31st, 1 and 5:30 Eastern time. The latest ones include measures to dismantle Fed unions, collective bargaining agencies involved, and other stuff. All right, will these exec orders help or hurt markets, guys? Who knows, bro? Yeah. Every time we think one thing, the opposite happens. Oh, yeah, I'm sure the VIX is flying today, to be honest here. It's probably dipping down over the last hour and a half, but I'm sure the VIX is flying today. Yeah, it's gapping up. It's almost at 24, 25. So volatility is high today, guys. You want to be very careful. You really do. Today, volatility is high today. Yeah, again, I'm not talking to any of you guys. I mean, Sam, I have no... Yeah, I mean, Sam, honestly, it's hard to tell whether you're telling the truth or not. We get so much random nonsense from YouTube. I'm not saying you're lying, but, like, I wouldn't listen to anything you're saying, guys. Again, I'm going to just respectfully decline to respond to most of that stuff. About insiders and all that stuff. Again, that doesn't have anything to do with me. I don't even disagree with the thesis. I don't think waiting 6 months and then starting to buy is a bad idea, depending on what the market does. Not an investment professional. I have no freaking idea what's going to happen. But yeah. Either way, you shouldn't be spilling any of that stuff here if it's real. And honestly, most of the time people are making stuff up in chat anyway. So I'm just going to respectfully decline to respond to, you know, that type of stuff. Palantir, guys, honestly, break it down. Look at Palantir. The VIX is up. PLTR, $80 a share. Big dips, big pullbacks. Hit lows of 70 during the correction, though. So it did hit lows of 70. Actually, yeah, this was in January. So, yeah, do your own research. Yeah, Meta at 566, Microsoft at 370s. And again, we're trading on Top Step today, guys. We are trading on Top Step's funded account program today. They give you a demo. They test your skill. You pass the test. They fund you. You fail. You only lose what you pay for it. We're slightly green today. I'm going to short a little bit into this pop. See if we retrace down quickly. It's a big candle. Usually I can catch some profit from this. See if we get a larger dip. Yep. There we go. I'm going to go ahead and cut this now. All right, cool. I just made another $15, $20 there. And again, you can see how similar this is to day trading stocks. No PDT rule in futures. I'm basically day trading the QQQ price action. No PDT rule. If you want to try Top Step, most legit funded program in the world. They give you a 50K demo. They test your skill with it. You pass the test, they fund you. You fail, you only lose what you pay for it. It's kind of like a souped up demo account. If you fail, you get a practice account with real-time data to learn on anyway. If you pass it, you could potentially earn a funded account, 90% split. You get to keep your first 10K in profit, which is similar to funding your own account. And they've paid out almost $200 million. They've been around for over 12 years. Great way to learn how to day trade. But they're an affiliate of mine. I am biased. I get paid by them. Top 3 most biased trader of all time ever in the world. If you want to check them out, understand all the stuff on screen. Understand CFTC 4.41, hypothetical simulated performance have limitations, guys. Not an investment professional. I mean, if I make 10K, I get to keep 9K. They get to keep 1,000 is what I mean by 90-10 split. I mean, you got to research the rules. If you're funded, it depends on how much profit you've built up. But as long as you've been following their rules, it's generally a 90-10 split, but you get to keep your first 10K prior to that. And again, most day traders lose. Doesn't matter what course you take, who you follow. Most day traders are going to lose regardless of where they trade. So just always understand that. I always try to be honest about it. Coming from like the top 3 worst day trader ever, most day traders lose. Yeah, I don't even know what advice is, Sam. Definitely not financial advice here. You know, not an investment professional. Yeah, when you trade futures, you're basically trading like the SPY and Q. Look at gold break down a little bit here, but gold's been in a range. Again, we take a look at the SPY here too. SPY's up to 550s. I can't go any direction besides short today though. Yeah, I can't really go any direction. Yeah, looking at our poll, we asked people, does the correction continue downward today? We got 1,200 votes. 78% of people say yes. 22% of people say no. All right, look at gold fall here, guys. Gold at 31.50s. Yeah, it goes by the industry standard. I mean, I don't give people financial advice anyway, and anything like nothing I say here I'm liable for, and that's pretty clear. It's in big yellow letters on screen, as well as like I always tell people I'm not an investment professional and everything, so I'm pretty protected, especially by industry standards. Like, I'm good, you know. Some would say I'm the top 3 most protected trader ever, but yeah, it's just industry standards. All right, guys, gold at 3151. Yeah, I'm definitely not buying it. But is the 10-year breaking down? That means interest rate sentiment is decreasing here. Let's take a look. Yeah, gold or 10-year yields open up at 4.2%, 4.19%. I think that sucks about this drop. You have no idea when he's going to say tariff. Yeah, I mean, we don't know what's going to happen April 2nd. That's why I'm not buying up anything. I would just be very careful. I don't know what y'all should do, anything like that, but I would just be careful. I think it's very possible the correction continues. It's also very possible we rebound back up. Yeah, I would just be careful. Yeah, do you guys think it's time to buy right now? Again, for those that think, here's a good question. For those that think it is time to buy, what's your justification? What's your idea? What's your thesis on a buy? I'm curious. I want to know. And maybe you might be right. I'm not saying you're wrong or right. I have no idea. But what's your argument? Is my hat being off like an indicator? Some people say it's bullish when I take my hat off. Or no, was it when I wear a hat it's bullish? When I take my hat off it's bearish. Which one is it? I don't know. It's something like that. I don't freaking know. I still think one more low. Market bottomed. Hat backwards is bullish. Okay, so should I throw the hat on backwards here? Or no, do y'all want it to drop? Yeah, again, I don't know. I think we're really close to these lows. I'm going to take the hat off. I think we're really close to these lows. I'm not messing with stuff. Yeah. Definitely not buying indices. I have no issues longing today if I see a solid setup. Yeah, I mean, I think short term you could argue a long thesis. I think it depends on how much we bounce back, though. Like, I think if we stay within a range of this here, I'm not liking a long at all. But I think if we rebound back up and we continue up and we get like way up here somewhere, like that's a different thing. You know, that's obviously looking a little bit more bullish. But it depends. If we're close to this level down here, I don't like it because I think the closer we are, the more pessimistic people are going to be. The closer we are to this 19,120 level. I think the closer we are to that, the worse it's going to get and the more fear is going to be in markets. But again, there's always variance. I think one of the things I really try to reinforce here on this YouTube channel is the concept of variance. Poker, it's a very common poker concept to learn when you're learning poker is variance. What that means is you might have the best technical setup ever. Nobody freaking knows what's going to happen. Variance is absolutely here in markets. We can put out different theses and different ideas and different technical strategies and patterns and setups and all this different stuff. But in the end, the market could just go the other way. And so there's always a degree of variance. You might do everything right, still lose. You might do everything wrong and still win. Understanding variance is important. And nobody freaking knows. It's one of the reasons, like, you get people trying to critique everybody's trades. Usually they're the most rookie traders because they haven't really learned variance yet. Like, they haven't really learned, market can do anything. Sometimes the loudest people are the weakest, if that makes sense. John, do you train with a gi? Yeah, I do gi. I do both. I do no gi and gi. I do both. I'm probably a little bit better at no gi. Just because, like, and again, I'm not bragging. These are just what I'm good at. I'm bad at a lot of stuff, but I'm good at standing. It's hard to take me down. It's not easy to take me down. I'm really good at sprawling. If somebody tries to grab my legs, I can sprawl and take their back and, like, choke them out. And so I'm just naturally better at at no gi versus gi. I could usually be pretty competitive in no gi, but, like, in a gi, you roll with like a purple belt or a brown belt. It doesn't matter how good you are. They can slow that down enough to where you're going to get tapped out if you're a blue belt or a white belt, And so I tend to prefer no gi, but I also love training in gi too. I like jiu-jitsu as a whole. And in gi, I'm really good at like bow and arrow chokes, arm bars. I can invert and arm bar people pretty easily, but I'm weak at like passing. Yeah, a lot of poker concepts to try to apply to trading for sure. Very similar, to be honest. Very, very similar. All right, guys. Have you ever traded in your gi? No. It's too hot, bro. It's too hot. I like no gi because it's less hot. Gi's freaking hot. All right, guys, so we got the market potentially continuing a correction down. If we break these lows again, do you guys think we're in a crash? What do you guys think? Markets haven't grown exponentially like this ever before. Yes, they have. So in 2000 or in 1990s, in the mid to late 1990s, we had a very similar revolution of technology, is what I'm going to call it. In the mid to late 1990s, it's called the dot-com boom. Or the internet had just taken off. Companies were IPOing, putting .com in the name, and like internet stocks were flying. They were flying, and that happened for half a decade. By the time 1999 hit, we just had vast overvaluations in stocks, and so a lot of stuff started to correct. We had one of the longest bear markets in history following it, and part of that was because we had the dot-com crash. We started to rebound back up 2005, 2006, and then boom, we had the mortgage disaster bump us right back down. And so we had one of the longest bear markets in history, mostly because we had two big, massive, like bubbles in the market burst within 10 years, in a 10-year period of time. So it's a little different, but you know. Oh yeah, I look at patterns. I look at setups. Really, I look at levels too, but everybody's different, man. Let's document some levels. I think we gotta look at here. Here. We gotta put one up here for sure. That's a low. We could put one there. We'll keep it like that. 200 might be a spot here too. We got the 200 exponential right here as well, but the market's very flat. Crash, then bounce, then crash, maybe. Yeah, guys, we got 15 minutes. 15 minutes until the market opens. Hey, what's up, Tiny? It's going to be a good day. We'll be pleasantly surprised. I don't know, man. I hope so. I tend to hope the market goes up, but I don't trust it right now on the long side at all. I'm mostly skeptical right now. But who knows, man? I don't freaking know. Expecting gold to go up. Yeah, well, gold's been breaking all-time highs here. Here's bond yields, 10-year. Here's gold. Gold's right around all-time highs. 3160 is the new all-time highs for gold. So yeah, just waiting for the opening bell. So we've broken a lot of lows and then rebounded right back up. So yo. The reason to buy economy always comes back, and this is the bottom. Well, maybe. We'll see. We'll see, guys. Apple back up to 220s almost, 217s at least. Palantir still breaking down. Look at week this morning. Again, Nvidia down a lot. Again, Nvidia, remember the level I talked about this morning, guys. I'm still on that level. The level I'm referencing is this 102.15 level. If you look at this level, it's the low. This level right here. You see this level right here? This is the low of the last like 7 months for Nvidia. Nvidia is one of the stocks leading the market, and it's at 105s right now. And so if it breaks 102s right here, that is what could catapult us down if we break this level. I'm not saying it will. I have no freaking idea if it will or not. If we break this low right here, pay attention to this level. Not an investment professional. I have no freaking idea what I'm talking about, but pay attention to this level right here. Just a weatherman at this area right there. Pay attention to that spot right there at 102.15. Yeah, we're so back and forth too. Some people think it's the bottom, other people think it's a continuation. Max Payne over with? Yeah, we'll see. Prequel. March 2026 puts. I don't know if it's going to last that long. That's a long time. A year? You think we're going to bear market for a year straight? There's only been 3 bear markets in the history of finance in which we've downtrended for more than a year in a row. Only 3 times in history. I think it's 3. I might be wrong. I think it's a year. Let me make sure I got this right. It might be a little bit more than that. Hold on, let me see. It might be like 5. Yeah, 2022 was a year. And I remember buying in 2022 based off of that exact statistic. We got Chicago PMI in 25 minutes. I forgot about this. I don't think it's going to move stuff, but I'm still watching it. Okay, we've had 4 times in history. Throughout financial history, there have been a couple instances. 1929, 1973, dot-com crash, and the 2008 financial crisis. It might have been 2 years or more versus 1 year, though. Let me make sure my stats are right. Yeah, I think we're way too close to these lows of the last 7 months for me to be interested in buying up anything. Okay, so it's 2 or more years. My bad. So the market is only downtrended for 2 or more years a couple different times. The Great Depression, the dot-com crash, and the 1973-1974 oil crisis recession. And that one wasn't 2 years. That one was only a year and 10 months. Under 2 years. So there's only been 2 times in history of finance in which the stock market has downtrended for longer than 2 years. So what does that mean here, guys? What I hear from this is that you better believe we start downtrending for over a year, I'm buying. But it could also punish me if I do that. Like if it is one of those instances where that happens, you know, I'm gonna just DCA until I'm okay. But you know, but yeah. Bitcoin coming back down a little bit as well. Shaky, shaky. All right, guys. Hey, we got 8 minutes until the opening bell. Let's see what we get. But that's excluding years where it was a 0.1% increase. Well, yeah, because that's a gain. Yeah, I'm going to tell, I see a lot of people going back and forth in the chat. I'm going to say something here, and I want everybody in here to listen to me. Okay? You can think the market's going to do one thing, right? But it doesn't mean it's not going to do the other. Okay? There's always variance. And so betting on one thing or making fun of thesis of other side traders is ridiculous. Because nobody freaking knows what the market is going to do. Nobody knows if it's going to break lows and continue down today. Nobody knows if it's going to rebound today, guys. So you might have a thesis and you might believe that thesis, and that's great. You always have to recognize variance and understand anything could freaking happen. Basically, like, don't be toxic and argue and make fun of and call names and do all this different stuff, because in the end you might look dumb, because we might do exactly that. Whatever that you're making fun of, we might do exactly that. And then I bet you crickets are going to come if we do. And so in the end, just don't be toxic, guys. It's all good. I appreciate this community. Honestly, we got a really good community here, and I appreciate it. But yeah. All right, guys, we're up to almost 19.2. Let's see if this rejects. We're hitting the 200 exponential right here. I don't trust it enough to long. My guru said, unless he's one of the top 3 gurus out there, you know. Love and peace. That's right. Oh, I'm a bull. Trust me. Up until December, people were calling me perma bull. And then I had a bear thesis, and then everybody saw that my bear thesis was actually correct. You know? And so, yeah. I'm not perma bull. I just don't predict a crash every freaking year and be. Look at the market. Whoa, 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 whoa. Google just dropped a lot. Apple just dropped a lot. Microsoft just dropped a lot. Looks like it's AI related. Let me check. Hold on. Let me see what's going on here. Something happened. Let me see if it's stock news. Could be stock news. Hold on. Let me see. All right, guys. We got less than 5 minutes. I don't really see anything recent. Yeah, I don't see anything. I don't know why these big pullbacks are. Somebody maybe liquidating some money. Yeah. Yeah, it could be market opens up in 5 minutes. All right, guys. You guys ready? We got less than 5 minutes. We got like 3.5. Definitely top 3-ish. All right, Microsoft rebounding back up a little bit. We got this little drop, but I'm looking at this level here. And again, I'm gonna wait. We got 3 minutes until the open. Y'all be careful. Yeah, so I saw that pawn. I did see that. Yeah, I'm sure the VIX is rising. It's up big overnight because, I mean, you got to understand this, okay? The VIX moves up when the market moves down, especially during corrections when volatility is high, the VIX is popping up. So market goes down, VIX goes up. Yeah, so another big news is that the president said reciprocal duties will cover all countries, and he threatened a lot of other countries with oil tariffs. So he said on Wednesday that 25% tariffs on vehicles, April 2nd. But he's also recently said a couple different things. The latest one is that he said reciprocal duties will cover all countries. And that's kind of one of the reasons the market dipped a lot over the weekend. And look, market's coming back down here, guys. We're getting really close. See, again, I certainly don't like a long here, but I have no freaking idea what's going to happen. But I definitely don't like a long. Yeah, y'all be careful. We got 2 minutes. Bullish or bearish at the opening bell, guys? Let me know how you feel. We got 2 minutes left. It's time. Y'all be safe today, man. Market's flushing. I'm flat. I'm flat too. Honestly, I don't. We're getting way too close to these lows for my taste here. Again, like I said, I'm certainly not long. And the closer we get, the less I like it on the upside. The more I like the downside. But again, the only problem is like we're a minute away from the opening bell, and so the volatility that we get from that is too much for me to enter right now. We're gonna wait and then play off of some type of momentum at the bell. Is what I'm looking at right now. Look at this weakness showing up. Yeah, 30 seconds, guys. About 35 seconds, but yeah. All right, guys, 20 seconds. 20 seconds. Hit the live button next to the play button. Catch up. You guys ready? We're down to 160s. We're getting very close to this low, chat. Very close. But we kind of. All right, there's the opening bell, guys. There's the opening bell. Y'all be careful at the opening bell. Again, we could go up. I don't know. Again, I really have no idea. I see some quantum stocks jumping. Could be trapping bears now. I don't know. I don't know enough to where I'm not trading. Look at that retracement back down. Whew, scary. Nvidia popping up a little bit at the open though. Yeah, look at this retracement. A lot of stuff's green. Apple's green. Palantir's green since the opening bell. Tesla's green since the opening bell. Meta's green since the opening bell. Doesn't mean we're going to go up, but a lot of tech stocks are green since the open. Part of me wants to buy this up, but again, we're way too close to the opening bell and we're way too close to these lows. So, yeah, and it looks like that's the good move. Meta just turned. Microsoft's breaking down. Google just turned. Tesla just turned. So, yeah, we're too close to these lows, guys. Y'all be careful. Now we're bouncing off the bottom here. I wonder if the market's going to be choppy leading into the... We also have Chicago PMI today at 9:45. Yep, so we just cracked that low here, guys. We just cracked it. Yeah, so we got funded in that account. We're up $3,000. You'll love to see it. It's our 4th funded account currently. And this low was just super predictable. I should have jumped in. We're too close to the opening bell though, but look at this breakdown. If we retrace it all, I'm shorting. Okay, we're gonna short that. Can't help it. There we go. All right, so we shorted it, scalped it, just made about $30 here at the opening bell. We're out of that. It's too close to the open for me to usually trade, but we got short. Again, we're testing 19,000 right now, man. The correction is here. That's scary, scary, guys. Y'all be careful. Chicago business PMI comes out at 10 or at 9:45. 9:45. We'll cover it live here like we always do. I'm not going to schedule it in the title, but we got less than 10 minutes. Sheesh, guys, we're testing 19K right now. 19K. Nvidia down big. Again, this is obviously weak. Look at the crash. This is a big correction now, guys. We have effectively broken down. The Nasdaq is down over 15% from its highs earlier this year. Still breaking down. A lot of tech stocks are breaking down. Nvidia, guys, getting very close. Remember that level, 102.15s for Nvidia. 102.15s. I'm definitely not longing this. The next level I see on the chart is 19s. 19s. So 19,000 even. Again, Nvidia breaking down though. I think a lot of people are going to be weak right now and bearish. I would just be very careful logging right now. Not saying there's not opportunity, but I'm not taking any of that. It's way too weak here. We could stop at 19 and rebound. Let's see if we get a retracement candle. Man, the market's kind of sketchy, guys. Y'all be careful. All right, so market's honestly trying to bounce back here, but we crack lows. All right, so we honestly got a huge rebound back up. Let's see if it holds. Let's see if the correction continues, guys. We got Chicago PMI in 5 minutes. Really, we got about 7 minutes left. 7 minutes. Oof. All right, so we got ourselves green in every account, man. We've been trading a couple different accounts today, shorting mostly always, and we're green on everything today. Just really predictable short action, to be honest here, man. The market testing freaking 7-month lows. As I said earlier, the closer we get to that data, or the closer we get to that big milestone level, the more probable it is that we break it. The next level I think is very relevant for markets is obviously like 19,000 on the NQ and Nvidia at 102.15. Nvidia at 102.15 is the 7-month low. We are seeing rebounds though in Tesla, Google, Apple. We're seeing some small rebounds. This music's too happy for this price action. Hey, later, Sam. Have a good day, bro. You know how they say you're supposed to wait for volatility to make money? I think today's one of those days where the volatility is super obvious. I'm not saying it might rebound from here. I have no freaking idea. But again, if you want to try day trading, it's all about waiting for days that are good and like that fit your system. Today fit my system really well. So again, if you want to check out Top Step, I'll put the link up. There's no PDT in futures. You can day trade the S&P, the Dow, the Nasdaq, the Russell. Very similar to day trading stocks. No PDT rule in futures. Most pro day traders trade futures. They give you a 50K demo. They test your skill with it. You pass the test, they fund you. You fail it, you get a free practice account with real-time data to learn on afterwards, and it's only $50. No PDT rule. You can day trade the S&P, the Dow, the Nasdaq, the SPY, and Q price action, basically. And if you pass it, your risk, it's very similar to funding your own account. You get a 90% split. You get to keep your first 10K in profit. So it's kind of the best of both worlds. It's limited risk. If you lose, you're out $50. You get a practice account, which might cost the same if you were going to buy it independently anyway. But if you pass it, you get a 50K funded account, 90% split. They pay out millions. They paid out almost 200 million. Fund thousands of traders. Just a great way to learn how to day trade. And most day traders lose regardless of where they go. So great way to learn with limited risk instead of funding your own account and losing that, trying to look cool. This is going to be a cheaper option for most day traders trying to learn and pay that market tuition in a cheaper way this way. No PDT rule. Again, here's the link in chat if you want to check it out. They are an affiliate of mine. I am biased because I get paid by them. Understand CFTC 4.41. Hypothetical or simulated performance have limitations, guys. Top 3 worst trader of all time ever in the world. Don't copy me. I have no freaking idea what I'm talking about. With that said, though, we're consolidating after this big breakdown here. I'm watching 19,000. Nvidia is getting ready to crack lows if it continues this pattern here. So Nvidia is at lows of the day right now, and I think this is the make or break moment for Nvidia, which might lead the rest of the market down if it doesn't look good. There's Nvidia cracking lows. Nvidia just broke lows. Dude, I'm not covering any losses, Corey. I don't even know what a loss is, bro. I'm not an investment professional. I have no idea what I'm talking about. All right, so look, there goes Nvidia cracking lows, like I said, at 103.90s. Nasdaq's going down following it. Watch 102.15s, guys, in the market. We got 19,000 on this in NQ. SPY cracking lows as well. All right, Chicago PMI drops in 4 minutes, chat. I'll put the text up on screen. All right, so we got Chicago PMI, 945. It's expected at 43.6, 43.6%. Market's at lows. 7-month lows testing again here. and tossed listening to your reports on which indices are cracking lows. Very helpful. That's what I'm here for. Meta breaking down, cracking lows. Google breaking down, cracking lows. Apple actually rebounding back up some. Tesla at 245s. Watch Nvidia, though. Nvidia testing lows. 103.75 is the new low. Again, Chicago PMI releasing in 2 minutes. So... we're still falling. Look at this. All right, guys, we got a minute and a half before Chicago PMI releases here. Again, it's expected at about 45 point. I'm showing 45 point. I'm going to put it right around 45 because I think it's anywhere. I'm showing 45. I'm just going to put it at 45. All right, you guys ready? We got a minute left. Let's see what this does to markets. Watch Nvidia. The VIX is shooting up, breaking highs almost at 25 right now. Testing lows. All right, guys. Less than 60 seconds. All right, here we go, guys. We got 30 seconds. 30 seconds. Market's testing that 19,000 level again. It's a big milestone level, 19K. It's a big whole dollar number, 19K in futures. Nvidia testing lows of the day as well. We got Chicago PMI in 20 seconds. 20 seconds. I don't know how much this is going to move markets, but it's worth a watch. But again, who knows how much this is going to move things. We'll see. 45.5. All right, here we go. 5 seconds. Right at 19,000. 5, 4, 3, 2, 1. And here's the data. Let's see what it shows. Nothing yet. I'm not showing anything yet. Waiting. Market just broke down under 19K. I don't see anything yet, guys. They're late. Nothing yet. All right, we did crack 19. Chicago PMI showed 47.6 versus 45 expected. 47.6 versus 45 expected. Higher than expected. Stronger manufacturing data than expected. But market didn't care. It broke down under that 19,000 level here. Again, 47.6. We broke under 19K though. Let's see if we can get back up there. Here's the data right here. I'll put this data up on screen now too. We also had Deutsche proposes a 2024 dividend of 68 cents of euros per share. Previous was 45. AMD files for an offering of up to 9.1 million shares of common stock by the selling stockholders, according to an SEC filing. AMD down. Yeah, that's dilution. You know, an offering is dilution. It's them adding shares to the float, selling more shares to the public. All right, guys. So now I think the big edge on the short side might be done. I don't know. We might continue down, but I'm definitely not buying right now. But I definitely don't think like the shorting edge is there anymore. Or definitely is a strong word. I don't know if the shorting pressure is there anymore. We'll see. We might continue down. Yeah, and again, guys, that's basically all the data today. We don't have any other economic data. We're green everywhere. Multiple different accounts were green, so. All right, here we go. We're testing that 19 level again. Are we going to bounce at it now? Maybe not. I don't know. Let's see. Are we going to bounce? There's 19s. I don't know. We're getting pretty close to these lows, guys. Again, I think the one to watch right now is Nvidia. I think Nvidia gets down to 102s. It's at 103s now. That's bad. All right, so we are bouncing at 19K. A little bit at least. Yeah, so AMD did file for, let me see, where's that offering news? Yeah. Alright, so we are rebounding back up. We're at 1925s right now. Sideways the rest of the day. Alright, I can't deal with this song anymore. Dubba dubba da dubba da, you know, can't do it, can't handle it. Meta's rebounding back up a little bit. A lot of stuff's down though. Also, guys, if you haven't already, check out Discord. Completely free, doesn't cost anything. If you want to hang out with us after the stream ends, here's our Discord, completely free. Completely free. There it is, right there. Check it out in chat. Great way to help support the channel. Doesn't cost anything to sign up. We appreciate the love. Yeah, I can't handle that song. It's just dubba dubba duh. Can't do it. Right, so we got a little bit of a rebound here. Let's see if we continue up or down. What happens here? That's a big pop in markets, guys. Big pop. Let's see what the market does. So we've bounced back up a little bit. Does it hold up here now? I see some stuff rebounding here. Again, for me, I'm worried about Nvidia testing that low of the last couple weeks. Yeah, so I'm worried about Nvidia testing that low of the last couple weeks. So I'm going to give it time, but... It's a big red candle. Let's see if it turns now. All right, so we're up like about $175 on both of our accounts. I don't know what to do with the rest here. Yeah, whether Top Step works for Romania, I don't know. You got to go check with them, bro. I see the VIX starting to down push a little bit here, but I don't know if I like it enough to go long right now. IONQ up to 2230s here, 2230s. Tesla at 250s. So what about quantum? Some people are saying it's quantum week. Is that true? We got like a quantum conference. Is that true? When? Yeah. I mean, we bounced up some. Look, I'll put up this other account that I'm up a little bit on, but actually no, I'm just gonna wait. All right, I got one contract left on this account, but I'll see if we can maybe add to this. I'm gonna get out a piece of this here and just lock it in. Somehow it gave me like profit on that trade, but I'll add to it. See if it liquidity grabs up here. There's 3. We got a cushion on this account to play with. That's why we're doing this here, but getting kind of. We'll add 2 more. See if we come back down, which is what we obviously want, but I'm gonna lower my size a little bit there. And again, we've kind of turned back here so I can. 3 contracts now, very small. We gotta turn back around like I want us to here. There we go. Nice. I guess we're just gonna hold this. I want to see if we come back down in range down here. Not what we wanted. We're still green on the day, but took away some of our profit. I'll try to do this again. It's a big retracement down. All right, so we'll take 3 and then we'll use a pretty tight stop here. All right, took half off, locked that in. Took another piece off, and then we'll be kind of loose on the rest. Alright, took that off now. There we go. Nice. We'll go ahead and cut that right there. All right. Well, yeah, not too bad. We'll switch this guy. We're green on this one. I'll switch to a different one, which we're also green on. So we got this short level at 119 that we used. How long do you think it will take for the Nasdaq to reach 20K again? Who knows, man? It could happen tomorrow. Could happen 6 months from now. No idea. Yeah, this level held really nicely. This is why, like, one thing you'll see me do, especially if we don't have levels around, is I'll document levels as like the first step, because these levels are what I play off of. So like this level here worked really nicely there. And again, I'm watching Nvidia very closely too, because like if Nvidia turns and starts to break down and gets really weak, if it gets anywhere near that 102.15 level, I'm worried about it. You know, I'm worried about the market as a whole, to be honest. If Nvidia gets near 102.15, that's the 7-month low on Nvidia. We just got to be really careful. All right, so this is the retest, so I'm not messing with it on the retest because we've already tested it once, and so there's too big of a chance that we break it now on the second test. We might not. We might reject here, but like that's kind of how I play these. I'll look for the support to hold once, resistance to hold once, but then we're not going to do another one. Yeah, and see, we kind of broke over this time. SPY rebounding back up here too. Tesla going green on the day too. So again, here's the 200 exponential right around 160s. Here's the 200 EMA at 156, 155. But again, Nvidia's looking strong. So look, guys, I'm probably just going to shut it down and wait here. I don't see anything I like right now. I'm definitely not going to long anything, and shorting seems a little sketchy too right now. Again, levels to watch. Obviously, the low of the last 6 months, 7 months, under 19,000. Nvidia, watch 102.15s. I think that's a really important level. And yeah, y'all just be careful. Again, if you want to check out Top Step, if you want to day trade with me, volatility's high right now. I'm having a lot of success. If you want to check out Top Step, day trade with me, check out the link in the description. Great way to learn how to day trade. Most day traders lose. Just a cheaper way to learn, pay that market tuition. But most day traders lose, so it's a lot cheaper to try this, learn. If you pass it, you get a 90% split. You get to keep your first 10K. If you fail, you're only out $50 for the base one per account, so it's not the end of the world. But again, they're an affiliate of mine. I'm biased. As always, guys, I have no freaking idea what I'm talking about. Might be wildly wrong about anything and everything I say. Y'all be safe in this market, guys. Y'all be safe. Tomorrow, listen, guys, tomorrow we got the JOLTS job opening report. We have ISM manufacturing data. We got some Fed members speaking and more tomorrow. Y'all be careful. Be careful, guys. Be careful. Be careful. I'll see you guys later. Y'all be good.